What is going on, guys? Welcome back to Trading Learning 101. Today's video, I want to give a real quick explanation on what is shares outstanding and what is shares float. Let's dive in and break it down. So I get this question a lot. What is float? Every time I mention how low of a stock float is. You'll see a lot of chat room pump and dumps play a lot of low float stocks, or if you're ever curious on why your trading guru only looks for low float stocks, is because they can be easily manipulated. We'll jump into the first one. Shares outstanding. What is shares outstanding? Shares outstanding is the total number of shares the company has, period. It doesn't matter institutionally owned, how many insiders own shares of the company, public owned shares of the company, is the total number of shares, period. Then you got the float. The float is the amount of shares for the general public to trade. You and I. They separate the two because you have these institutions that like to buy 200,000, 500,000 shares. They're going to own the whole entire company. They put those guys off into their own territory. They break it up into shares outstanding of how many there is total. And then they have the shares float. Like I said, the shares float is for you and I as an investor. We're just normal people. These are the amount of shares that is available to the public to trade. So that's why you'll see a lot of times, I got ticker ABIO up right now. Its float is 1.4 million. That's why you see all these huge candles on it right here, going from $10 to $20, $8 to $18, $6 all the way up to $20. Here's another chart right here just to give you an example. A very low float stock, a lot of people will look at it as if it's a sketchy company because they're not stable. You can see here they're very volatile. The stock price is just up real huge, down real huge. People look at low float stocks as high risk. That's why you won't see a lot of long-term investors investing long-term in low float stocks. You'll see a lot of pump and dump chat rooms playing low float stocks because it can just be easily manipulated. If a guru has 1,000 people following them and that trading guru says, hey everybody, I'm watching ABIO. I'm looking to buy at $10. If it can get above $10, I'm looking to buy. With a low float stock, he announces that the stock creeps up to $10 and breaks over. He buys, all his sheep buy, and that's when you'll see supply and demand come into effect. And that's when you'll see the stock rip from $10 all the way up to $19. It's just basic supply and demand. You'll see stocks that have a huge shares outstanding, but a very small shares float. Just remember, the shares outstanding is the institutions, the insiders owning the general public. It's the total amount of shares that are out there for the company. The float could be really small. With a really small float, supply and demand could be a huge factor because there's not many shares for the general public to trade with. Also, what I look at is insider ownership and institutional ownership. Insider ownership and institutional ownership is going to be a part of the shares outstanding. So we looked at ABIO. It's low float and these very long candles here, and we see how volatile it is. Let's take a look at a more established company with a bigger float. So I pull up GE right here, General Electric. You could see its shares outstanding is 8.82 billion. Its shares float is 8.71 billion. So they have a lot of shares out there that are available to trade to the public. And the difference between the two really isn't all that much. And with a big float like this, 8.71 billion, you're going to need a lot of volume to move this stock. And if you look at the chart right here, you could just see how little all these candles are right here, because it's going to take a lot of volume for this stock to make really big moves. The bigger the float, you got to think, the bigger the float is, it's going to take more volume to get that stock up and going. The lower the float, the less volume you need to get that stock going and ripping. It's just basic supply and demand in the stock market. That's what it's just basically revolved around with the stock market when looking at stocks to trade. As a trader, a swing trader, a long-term investor, you got to look at it in all aspects. You know, if a stock's trending up and it's got a really, really huge float, then you might as well join the crowd, because majority of the volume is bullish. And the stock's going to keep trending up because people see that and they're going to keep jumping in and jumping in. And it's harder for people to reverse the trend when a float is really, really that big and majority of the crowd is bullish. Now, you got a stock like ABIO, I'll give for an example. ABIO has a super, super high float. In a blink of an eye, it could be trending up and then it could be trending down because of how low the float is. There could be a demand there that's bullish and they all could be going long as it's going up. And then all it takes really, especially with a really, really low float like that, all it takes is for one big seller for it to reverse the trend, and then it just goes right back down. Because again, supply and demand. You got a huge demand there, very, very little supply of something. Someone gives more of the supply back out into the market, that's going to decrease the value. So I get this question a lot on what is shares flow. I thought I'd break it down for you guys. If you want to dig more into it, I will leave links to Investopedia. They call it the floating stock. The stocks float, but I'll leave a link to these descriptions in the description down below of this video if you guys want to read more into it. Use Investopedia for a lot of stuff. If you have questions about the market, they have a search bar right there. Just ask the question and it'll pop up with all kinds of answers. I love Investopedia. Investopedia is like the dictionary for the stock market. So I'll leave a link in the description of this video down below for the stocks float, and I'll leave a link to the shares outstanding so you guys can dig in more and read up on it. And they give explanations, examples, breaking it down, how you can calculate a shares float and shares outstanding. What do they mean? Just great examples with blue chip stocks, share repurchase programs. You know, you always learn something new the more you dig into it. So if you're interested in being a trader and involved in the stock market, why not try to learn as much as you can? But they really do have some great examples and they really break it down in these definitions on Investopedia. So I really hope this video helped you guys out on figuring out what is a stock's float and what is a stock's shares outstanding. If you guys like this video, make sure you guys hit that thumbs up for me. It lets me know you guys are liking the content. If you're new to the channel, please subscribe to the channel and join the Trading Learning 101 community. And until next time, guys, have that patience, have that discipline, and study, study, study. All right, everyone. Later.